Hey fellow investors and fellow stock guardians, it's Wednesday, March 10th, 2021. I'm Hoda, co-founder and CEO of StockCard, and today I'm recording this episode mid-trading day. So far, I'm reporting to you from a green stock market. By midday on Wednesday, all three indices were in the green. However, the Nasdaq isn't too far from zero daily gain and has been losing momentum all morning. The story hasn't changed much. The stimulus package is almost finalized, the treasury yield is on the rise, and more vaccines are on the way. Investors swing from buy the dip strategy to stay away from high flyer tech stocks depending on the overall sentiment. I'd suspect this swing continue until something significantly changes about the state of the economy or the state of the pandemic. Since I'm recording today's episode before the markets close, instead of the usual winners and losers, let me do something a bit different. I have been thinking about what kind of companies make it for a good reopening investment. Yesterday, we talked about one such company. Today, let's use StockCard's filters to create a reopening watch list. At the end of the episode, I'll also hand it to our partner Joseph Hogue from the Let's Talk Money channel, and he's going to research an excellent but somewhat unknown stocks for your reopening portfolio. If that sounds like a good plan, let's get to it. Let's go to Discover page, click on the filter tab, and start a reopening watch list. The first filter I want to add is companies' market potential. Most companies that do well during reopening are in sectors and industries that are not high growth. For example, e-commerce is a high growth sector, but traditional retail is a slow and steady industry. So this time, we choose low growth or fair growth potential as our main criteria. When we invest, unless we are speculating, we'd want to invest in companies with no cash concerns. So if something goes wrong, they can keep going without the need to raise capital or borrow money. So let's choose no cash concern as our second filter. Next up, I want to focus on companies that may have struggled with sales due to the 2020 pandemic, but balance that off with a positive sentiment. The logic is that the 2020 sales were not good, but now due to reopening, things are returning back to normal. Therefore, the sentiment about the company is changing and becoming positive. Lastly, I just want to focus on larger companies on the Nasdaq and New York Stock Exchanges. Hit apply and we have a reopening watch list. The results is interesting. The company that immediately grabbed my attention is Kratos Defense for two reasons. My dog's name is Kratos, and it seems yesterday Cathy Wood from ARK Invest just picked up a few shares. This is the one I'm certainly adding to my personal watch list to research further on. Alright, let me save the reopening watch list and give you a link in the show notes. You can visit the watch list, apply your own filters, and get to a list of companies you may want to add to your portfolio from this starting point. Now, as I promised, let's pass it to Joseph Hogue, portfolio publisher behind the Bowtie Nation portfolio on StockCard's stock pick page. He will tell you about one not so well-known reopening stock. Joseph is an excellent stock market researcher, and I really enjoyed watching his latest video. This clip I chose for you today is the last part of his latest 3 stock picks as a part of his reopening strategy. Joseph, take it away.
Another stock I think could surprise higher here is Madison Square Garden Sports, ticker MSGS, the $4.8 billion operator of the Event Center in New York. Besides the marquee Event Center, the company also owns the New York Knicks, the Rangers hockey team, 2 development leagues teams, and an esports franchise. And this one is our value play on the list, still trading 6% below its pre-pandemic high and some solid growth prospects for this year. The NBA regular season started late February and the Garden already has some events planned. For this coming quarter, the company is expected to report $1.29 in earnings per share versus a loss of $1.69 a share in the last quarter, which would be a big turnaround.
As always, if you like to give StockCard a try, research as many stocks as you want, and receive stock pick ideas from successful investors like Joseph, sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I'll see you tomorrow.